Qualcomm announced their earnings 2 days ago, and the stock has been selling off. Now, this stock here is part of the red hot semiconductor industry. And for a while, it was caught up in the really good rally that semiconductors experienced over the last couple of years. But in the middle of 2024, this stock really sold off. And I really liked the price to value ratio I was getting with Qualcomm. So I started to buy the stock. Now I'm sitting on a nice gain. The stock has been performing year to date, it's up 10%. And over the past year, it's done okay. It's done plus 17. And if you really consider you could have bought Qualcomm at really good discounts, you could actually be doing better than that. Now, is the stock a good buy going forward, or is this stock going to be struggling for a while? Well, let me take a look at the fundamentals and give you my opinion on what my expectations of Qualcomm are and what I plan to do with the stock. So first, this is a pretty good sized cap company, 187 billion, $40 billion in revenue. Qualcomm historically has been really focused on smartphones, so their chips are really in a lot of handhelds, phones, and devices. They've been trying to diversify away from that smartphone and getting into automotive as well as other use cases, which is a good idea to diversify. Now, their forward P is only 14, which is really out of the norm in semiconductor. Semiconductor is really expensive right now. They also pay a dividend of 2%. Analysts believe it's a buy and it's discounted by 20%. As I look at their financials, they look really good. They're growing at 12%, which is very good. And if we look at the quarterly, they're actually growing at 17% in the most previous quarter. So their growth is accelerating. They really are experiencing a nice growth trend. Qualcomm is really succeeding with Samsung, and in the top performing Samsung phones, which is one of the leaders in smartphone, the Qualcomm chipset is installed in those devices. So that looks really good. Also, their Snapdragon chip is popular with AI computers. So they're being installed on PCs that are made for AI. When we look at free cash, that is one of the highlights of this company. They just produce really good cash. And I like the growth in cash that they've exhibited and overall have very good gross margins, good profit margins. So just a really strong stock in semiconductor. Looking at what analysts expect, there's 25 analysts covering the stock. The best case scenario, an analyst believes the stock could rise to $270 per share. That'd be nice. The worst case scenario, one analyst believes stock is just a little overpriced and it could come down to $160 per share. It doesn't seem like a very risky situation. The worst case doesn't seem all that bad, and there's a lot of upside, which is why I really liked the stock when I looked at it in 2024. Looking at their expected growth and their earnings per share, in 2025, it's expected they're going to grow at 11%, in 2026 at 6.45, and then flatten out 2%. They're in a cyclical industry. They're going to have periods of growth and then periods where they contract a bit. So what's important to keep in mind is with semiconductors, I'll probably want to sell probably in 2026 early if everything works out well and I'm sitting on a good gain. And I see that this cyclical cycle is going to come back and they're going to start to contract. It'd be a good idea to lessen my position or sell out. The earnings per share are going to expand nicely for the next 2 years. That looks really good. And the PE is really low. Really catches my attention to be able to buy a stock at a 14 PE. You have stocks that are well over 30 PEs, and some stocks are really, really high. This one here is nice and low, and it continues to grow. So really attractive to me. I valued Qualcomm by looking at their cash flows, creating a forecast of those cash flows, and then taking a present value of those cash flows. And that's the first method, and that's the principal valuation method that I use when I look at stocks. The forecast starts with their 2024 cash flows, and I'm going to grow those cash flows by 8% in the first 4 years, and then 4% in terminal value. I'm going to add cash and take away debt to get to an equity value. This is what the company is worth if you really focus on cash flows, which is the most popular way for investors to look at a company. That is the true measure of value. If we look at cash flows, this stock is highly discounted by 90%. It most definitely is a buy. Earnings per share, if I take a 18 PE and take it their current earnings per share, grow it by 6%, I get a 29% discount. Analyst on stockanalysis.com, we're at 20% discount. So I'm not too far from where they're at based on the earnings per share. I'm using a higher PE because I do believe that they deserve an 18 PE, growing, profitable semiconductor company. I combine the two, taking more value or taking more weight from the free cash flow method to get to a 70% discount. So Qualcomm is a stock that I am buying. I'm buying it dollar cost average my buys and really building up a position. I really like the price to risk to reward ratio. I think this stock could really go up 40, 50% over the next year to 2 years and pay me that dividend along the way. And I don't know that there's a lot of downside. I think the downside's already been limited because the stock sold off in 2024. So that's my video on Qualcomm and my plan on Qualcomm. I'd love to get your comments on Qualcomm and what you think. And let me wish you the best of success in trading in 2025.